There's a risk in the financial markets that I don't see anybody talking about. Specifically, the stock market is hitting all-time highs during this government shutdown stuff, which is actually not out of the question or out of reality. Typically, historically speaking, government shutdowns don't have a huge impact on the markets unless there is a potential for a larger stretch of time where we continue to see the government in shutdown mode. And in today's video, I want to break down a risk that I just don't see a lot of people talking about to the stock market, which could also continue to buoy gold prices higher during a period of uncertainty. Let me go right into the point here. Essentially, the Federal Reserve is expected to meet at the end of October, and projections are for them to cut interest rates. But today we were expecting or hoping to get an NFP report, which would give us some key insights into the state of the US jobs market. But that, with the government shutdowns, were canceled. So we didn't get NFP data and we didn't get yesterday's unemployment claims data. And the reason this is so critical is because these data points are helpful to the Federal Reserve to make a decision as to whether or not they should cut interest rates. Now we know for gold specifically, if you're a gold trader, that rate cuts are typically bullish for gold. And we know that rate cuts are also generally bullish for stocks if the economy is holding up well. But if we don't have insights in the jobs market, then what do we do? Well, I want to show you something that is kind of critical here. And I think that this is my best guess as to what I think the Federal Reserve is doing during this. We did get earlier this week, we got some ADP numbers, which I'll talk about in a second, but the general trajectory of the jobs market is to the downside, right? It's been a weakening jobs market here in the United States. Take a look at the NFP report, take a look at the JOLTS job openings, which have been trending down for a couple of years now. And of course, the negative ADP number that we got here earlier this week. So my point in case here is that jobs market data is trending lower. So I think the default by the Federal Reserve is to cut interest rates in the upcoming October meeting. But the bigger question is, what about the following meetings after that? Are we going to continue to cut rates? Well, there's a big question mark in all of this because we don't have the key economic metrics being released due to the government shutdown and postponing of these data points. And if you're wondering what's going to happen with the NFP report, well, currently the tentative new date for that release is next Friday, October 10th. But notice that it says tentative because we may still be in a government shutdown and again have to postpone the data. So then why is this a risk, Nick? If the market is just going to get those rate cuts and we think that that's just going to be the default, whether we get the data or not, what's the risk? Isn't that just a good thing for the markets? Well, yes, but what if the jobs data that's supposed to come out or that was supposed to come out this morning, what if that data was actually horrible? And if it was very negative, like we were expecting 50,000 jobs to be added to the US economy, what if it was minus 80,000? Like what if it was a critical, really bad number and we should cut interest rates much sooner and more aggressively than we had previously expected to do so? This is what I mean by a potential misstep in policy could take place due to a delay in this data point. And what if the government shutdown continues for a couple more weeks and we continue to not get data? And we go further into this period where we don't have the data we need, or the Fed needs specifically, to make a good, accurate decision as to what to do next with interest rates. And this brings me back to gold and why I think gold continues to be in an uptrend, because I think that we are likely to, with all this uncertainty around the government shutdown, as well as central banks buying, as well as weakening jobs data, the macro looks good for gold. We have central banks cutting interest rates, not just in the US, but internationally. The story for gold still looks really golden from a big picture. And so while I do think prices are a little bit stretched in the short term, I do think there's a good chance that if you get pullbacks in gold prices in the coming weeks, that you are likely to get buy the dip mentality coming back into this market and continuing to bolster prices higher. I would not be surprised if by end of year we do make a move up to 4,000. And again, you may be wondering, well, why is the stock market so bullish if we're flying in the blind? Well, again, I think the market is just excited about the idea that we're going to keep getting rate cuts and that corporate earnings and AI all look really exciting. And so again, this is another market where I can't really justify getting short. Yes, I think it's a little bit stretched. Sure, I think it's a little bit overbought, and I don't necessarily love the outlook for stocks, especially when I believe them to be very expensive. And what you're looking at on your screen right now is the historical PE ratios for technology stocks. I've selected the ETF XLK to get an idea of what the average PE ratio of that part of the market is. Long story short, I said I believe that stocks are expensive, but it's not a belief. It's a straight up fact that on a historical basis, price to earnings ratios are very high across a wide area within the market. And the reason I point this out is if you're somebody who watches indices, I mean, take a look around the room. Utility stocks, which are power companies, are in the 90th percentile. You have real estate stocks, which are also relatively expensive. You have, as I mentioned, technology stocks. You also take a look at the broader market. We are expensive, right? So does this mean that I think stocks are going to crash? Well, the answer there would be no. I think stocks can continue to move higher. They're moving with a lot of momentum. However, on a bigger picture standpoint, numerous research reports have shown that when you get very expensive stock valuations, the 5 and 10-year historical average performance is underperforming the long-term averages. What I mean by that is if you were to go out and buy stocks at these levels, sure, you could get a really good run in stocks, but the longer-term implications and average performance of stocks from here is not particularly great. So when it comes to stocks long-term, long story short, I'm looking for discounts. I'm looking for pullbacks, and I do like the bigger picture for stocks, but I think the entrance point for getting long stocks is what really matters here. Here's a look at the U.S. economic heat map, and what you'll notice is that the S&P 500 is still getting a very strong macro score. Now, what this means is that when we look over here at our U.S. stocks gauge, most of our economic metrics are suggesting more upside for stocks. Now, again, this is not necessarily a timing tool. It's just generally a directional bias, which has been really correct in recent weeks. The idea here that stocks can continue is supported by the idea that you have strong GDP growth, manufacturing PMIs. Today's services PMIs did miss expectations, so when that updates, this will go red, but retail sales look good. You have wage growth that's holding up with inflation, unemployment rate, which is still historically pretty low. Jobless claims last week, we didn't get this week's, but last week's was better than expected. Job openings were slightly better than expected. ADP was a miss. So not everything is perfect, but by all kind of standards, we have a pretty good macro backdrop for stocks at this time. And so that supports higher prices. However, I still think in the short run, when we are talking about the stock market from a price action perspective, I think we're a little stretched to the upside. If you take a look at an RSI reading, you can see we are a little bit stretched here. Now, if we move on to gold here, the question is, what about gold? Gold is also pretty stretched. And with this uncertainty, I do think gold is going to remain supported. If you do get the government shutdowns kind of coming to an end, I do actually think that that could be a short-term catalyst for a pullback in the price of gold. I've mentioned, and actually going back to that thing I was just showing you with the U.S. economic heat map, it actually bodes negatively for silver and gold on a macro score basis because we've had such strong growth metrics. I think that adds a little bit of stability to investors and actually makes gold and silver a little less attractive. Remember, gold and silver love uncertainty and panic and economic turmoil and rapid rate cuts. And so I think you're getting a little bit of support from the situation with the government shutdown, but the bigger picture here for stocks, in my opinion, looks more attractive than something like gold and silver. Let's also talk about the dollar, because if we take a look at the dollar score within the economic heat map, we are still getting a really strong reading for gold. This tells me that pullbacks on the dollar are more opportunities, in my opinion, not financial advice, to actually stay long the dollar. I went long dollar yen over this week. I took two different trades, long dollar yen. I got long initially right around here and a second trade right around the lows here of this move. So I am looking for a bigger picture push higher in dollar yen. I think we could get that. Taking a look at the daily chart, we've been nicely grinding higher, although we've had it chop back and forth. The nice thing about this is that if you hold dollar yen long, you do get paid some nice positive swaps for being there and holding on to that due to the carry trade involved with buying dollar and selling or borrowing yen. Yields are also a little bit higher here today, so nothing too big on that front. But when it comes to the dollar, I think that you may have a nice rebound here from these lows. I've gone out on a whim saying I think that this may have actually been the low end of the dollar for the year. We've had a really abysmal year for the dollar index, now have gone sideways, and I do think that we are in the potential formation of bottoming out and maybe headed back towards that 100 level. That's been my recent call on my channel. So I am long the dollar. I own UUP, which is an ETF that tracks the dollar index against a basket of other currencies. I also own dollar yen in my currency trading account. and I do think that there are some pullbacks coming for precious metals. I'm not willing to short them because they are in very strong upward trends, and my strategy is heavily based on momentum and macro. So the two M's, right? If they are aligned, then I'm typically in the trade. But right now, I don't love the macro for gold at these levels just based on US economic data, but the momentum still looks really strong. So from a price action perspective, I can't really justify getting short on this one. And on my channel, I've been getting a ton of questions about when is the NFP data coming out? What's going to happen with the shutdown? A lot of people looking for news and updates on this. If you want to stay up to date, our team is monitoring the situation and will update you for free. If you are not already inside of our Telegram channel, here's your chance to do so. I'll leave a link in the description down below if you want to join us there. We have over 42,000 people in here. This is sort of our news channel. And if you want to stay up to date with what's happening fundamentally, macro-wise, of course, as well as technical analysis and chart markups and trade ideas, consider joining our Telegram channel, and you can also do so using this QR code. Simply scan this right here and that will take you to our Telegram channel. And if you're watching on a TV, I just know QR codes are a lot easier. So just scan that with your phone and it will navigate you over to the app where you can join the channel for free. In terms of top setups here for me, I have quite a bit of things on the list. Stock indices look good, but to me, I still need a pullback on these, so we'll skip those. I already kind of talked about that. I'm looking for dips on the S&P, the NASDAQ, etc. on the daily chart for some possible trade ideas. Dollar CAD is also another one that I'm looking at, so if I pull up, well, let's just take a look here. USD CAD, if we do get a pullback into the 50% retracement, I have my eye on this one. I like this quite a bit for a possible buy the pullback opportunity there on dollar CAD. Another one is, I'm going to just take a look at I'm going to take out minor currency pairs just to consolidate this list a little bit. I'm also looking at oil, but I don't like the technicals. So I talked about this yesterday in my video, but let me just pull up US oil here. Same story. You know, you're hitting a longer term level of support around 61, but I think that for me, I don't love the technical price action here. I do think what I'd prefer to look for on oil would actually be a sign of life in the technicals, basically a breakout here around 66. So it is a bigger term, bigger picture by the breakout kind of trade for me when it comes to oil prices. And if I take that trade or any trade, it will be shared inside of our VIP Discord. So anytime I take a trade, I share it inside of our VIP Discord, like for example, my Aussie CAD trade. Anytime I take a position, I share the full breakdown and analysis behind why the trade was taken. I trade commodities like gold and silver and oil. I also trade indices and so much more. If you're interested in getting access to these alerts sent directly to your phone or to your desktop, here's how you can do so. Scan the QR code on your screen or click the link in the description down below to get access to the VIP trading signals. They come fully with entries, exits, analysis behind the trade, and so much more. So check it out down below. Another trade I've been looking out for is actually Bitcoin. So if I take a look at the Bitcoin very bullish reading, we can see we're getting some good score on the economic data side. Technicals look good. Seasonality looks good specifically for Bitcoin. Let me actually show you that. So this is the full year seasonality for Bitcoin, which I've selected in the top right here. So what we can see is the year-to-date performance for Bitcoin has been pretty good. You had the big dip during March and April like you did with most risk assets, but then we had the really sharp rebound. And actually, the projected probability here is for a rally into year end based on historical 10-year average performance of Bitcoin. Having this chart is incredibly useful because, again, you can scan this for anything. If you want to look at stocks, for example, we were actually expecting to get a little bit of a sell-off in September. We didn't. So we broke the rules a little bit on seasonality here. Will we get a follow-through to the upside as we typically do into year end with that fourth quarter rally? Having these seasonal patterns, while they are not perfect, can be really useful for spotting, historically speaking, what tends to happen. And we do have this for currency trades as well. So for example, here's Pound Aussie. Look how clean Pound Aussie has followed suit. So seasonality is a really powerful tool, but most sites don't offer, well, they definitely mostly do not offer these sorts of things for free. But not only do they not only offer it for not for free, but they don't have as many charts as we do. So if you're somebody who trades currencies, commodities, indices, etc., it might be worth exploring the Edge Finder if you don't have it. If you want to try out the Edge Finder, simply scan the QR code here on the screen, or it's also in the description if that is something that you're interested in. But seasonality is one of my favorite indicators. It's a really simple concept, but repeatable and useful for opportunities that could come around certain parts of the year. Back to this idea on Bitcoin, I'm looking for a buy the dip opportunity on this one. We had a beautiful breakout through these highs. We were consolidating the last few months. I'm actually looking for a 38.2% retracement for a possible buy with a continuation move, in my view, to fresh all-time highs. The all-time high being around 124,000. I think we actually could take that out, but I would love to see if we can get maybe a dip here in the next few days, which would give me the chance to enter at what I believe is a good risk to reward basis. With a trade like this, I could essentially map out a good risk reward. So I could put, let's say, a stop just below the 61.8% retracement, with the idea being looking for a breakaway move to fresh all-time highs. We'll see if I get that set up. And again, if I take that trade, it will be shared inside of our Discord channel. And today's video is sponsored by DNA Funded. If you're looking to get funded this year, check them out. They offer payouts in as low as 7 days. They have profit sharing up to 90%, unlimited trading days on both their 1 and 2 phase challenges. And they also actually just offered a instant funding program as well. You can trade pretty much everything with this one prop firm. And with our code, you can actually get 20% off. Use promo code A1T20 at checkout for 20% off their challenges on their website. And I know I'm going crazy with the QR codes today. I built a bunch of these for you guys just to have them if you're watching on a television. If you're interested in checking out DNA Funded, there is the QR code. And again, just punch in that promo code A1T20 for 20% off. To summarize my thoughts in markets right now, essentially I am bullish on the US dollar. I think the stock market has room to pull back, though I'm not interested in shorting it. Same thing with metals. I think they have room to come down, but not something I'm looking to short. So I'm more interested in actually taking longs on the dollar. I'm also interested in pullbacks on Bitcoin for buying the dip opportunities. And I still like dollar yen to the upside in terms of a few trades that I am in myself or looking to get in at this current time. If you enjoy my videos, consider hitting the thumbs up button, subscribing. It really helps out just with what we're trying to share here, which is free value each and every day on my YouTube channel to keep you informed and share some of the ideas and experience that I have in markets over the last almost 10 years. Kind of hard to believe. Hope you guys have a great weekend ahead. Thanks very much for tuning in. See you next time.